Joining me now is Sam Lee, the President and CEO of Northisle Copper and Gold. Good to see you again, sir.
Thanks again, Mark. Good to
Yeah,
see you.
you as well.
Yeah.
Now, we've done this before. A lot of our viewers would know about the company and the North Island project, but maybe just give us a quick reminder, a refresher, and a snapshot.
Sure. The North Island project is a big copper-gold porphyry in British Columbia. It boasts approximately 7 million ounces of gold in indicated resources, another 1.5 million of inferred resources, and an additional 3.1 billion pounds of copper in indicated.
Nice big round numbers there with the copper. So you've got an updated resource estimate, came out a while ago. And so indicated resource estimate for copper, as you said, jumped 27% from the previous estimate, over 3 billion. And then the gold estimate was up 41% from the previous to nearly 7 million ounces. Again, a nice big round number. So give us some of the highlights.
Sure. So a couple of reasons why that happened. We made gold discoveries. So the last 2 years, year and a half, we've made 2 discoveries, one in a gold-rich zone, which we obviously announced throughout the process, called Northwest Expo. We recently, last week, announced that this is approximately 70 to 80 million tons of NSR value per ton rock, 2 to 3 times higher than what we currently have. That's approximately $55 per ton. Because we are very well advanced into a PEA, we have switched our cutoffs into NSR dollar per value cutoffs versus equivalency cutoffs. And so one can assume that our PEA that should come out in Q1 of next year would have costs in and around $11 to $12 per ton. So what does that mean? That means over 75% margins on that phase one, that enriched gold area. So we're very excited about that. And then the additive benefit of having large tonnage projects is that they just keep on getting bigger and bigger and bigger as prices go up.
And can you explain when the PEA comes out in Q1, I guess you said, of next year, how it will allow you to adopt a multi-phase strategy, lower CapEx initially, and then bridge to a bigger project?
Sure thing. It's a really good question, right? Because when you look at the overall resource, it's segmented into 3 areas: Northwest Expo and Red Dog. On average, that NSR dollar per ton value, which is essentially your revenue line post recoveries, is approximately $45 per ton, combined Red Dog and Northwest Expo. And then if you look at the costs that are in our footnotes for the resource estimate, again, this is stuff that we've developed in significant detail with Ausenco, the authors of the PEA. That's going to show in and around $11 to $12 per ton cost, which is the other great virtue of our project is the infrastructure is second to none. You look down, you've got roads built by the BC government. You look up, we've got power lines. We've got over 100 megawatts of excess capacity from wind farms on the island that we sell to California for their deficit. We've got a town that was built for mining in Port Hardy. We've got ports that exist for projects of this size. And so really second to none in terms of the access to infrastructure. And so what the PEA is going to show you, as per this cost metric, is that the costs are significantly low. And that's what you want to see when you're grinding stuff, when you're processing a material like this. And so if you look at just those numbers that we released last week in our resource estimate, $45 per ton rock in the first phase against a $11 to $12 backdrop, that's significant margin.
Now, Michael Gentile is one of your biggest shareholders, if not the biggest, perhaps, or one of them anyway.
Our chairman is the biggest, still about 11%,
okay.
But Michael is very close behind.
Okay, and we've talked to him a few times,
Yes.
and just I want to talk infrastructure and keep that theme going just briefly, because he said that that's one of the real selling points. He really stresses the importance of the infrastructure. Do you think the market understands it, or the advantage that you have there?
Not at all. I don't think they do. I think it's the reason why bankers and research analysts and buyers, strategics, always go on due diligence tours is because it gives them a strong essence of what the access to infrastructure is. And there are some projects out there that can't even get access roads built or permitted. Well, we have those access roads that are paved and that are sunk costs by the provincial and federal governments decades ago for this size project. So not only does that make costs lower, but that also incentivizes these governments, including First Nation governments, to repurpose this infrastructure for its intended use. And so that's why we've developed such strong support not only from our First Nations and our provincial and federal governments, but within the communities themselves, a lot of whom are actually shareholders of ours that are in very significantly elevated public positions.
Right, and Gentile has been on site, as you know, a few weeks ago, so he saw this infrastructure up close. He also said that the real game changers for him or the discoveries of Northwest Expo and West Goodspeed, in part because it means lower initial capex, quicker payback, higher margins, right?
That's absolutely right. And what we have in Hushmu, which is the big low-grade, high-tonnage project, is a project that will be cash flowing very strongly. Think of that as a Mount Milligan project, which is low grade but high tonnage. You just need to have a solution on how to build that without obviously encumbering your balance sheet too much. So our solution to that problem is Northwest Expo and Red Dog, which is where you get that higher margin, higher NSR value per ton rock, where you can actually progress an Artemis Blackwater style phased approach and take a smaller capital intensive project. In Artemis's case, it was 20,000 tons per day. In our case, we're thinking 20 to 40,000 tons per day. And then progressing and growing into the much larger cash flowing project that could be generational in length.
So just lastly here, Sam, in terms of catalyst going into 25, you got the PEA coming, you've got assays pending, correct, for Northwest Expo and Goodspeed, West Goodspeed. And also you said you feel energized these days because you're delivering, companies executing, markets perking up, things are good, right?
Yeah, absolutely. We just obviously listened to two of the greatest minds in our industry, Pierre Lassonde and Rob McEwen, talk about...
I sat beside them.
Oh, you did?
Notice that guy beside them?
Yeah, that would have been you. Okay, well, you should have heard the message loud and clear, right? I mean, the peril of being a developer or a junior company is this, portion of the Lassonde curve that you just have to survive. While you do all of this good work in order to get to that point of production and that uptick, you have to survive. Well, we are absolutely blessed with a 35-kilometer porphyry district where we have been quite equal in terms of our exploration success and our development success. As I said, we've discovered 2 new projects over the last year and a half that has now shown to be higher value rock than we currently have. And so we're going to absolutely continue that progression as well, understanding that we want to be on both sides of that curve, right? That initial exploration success upside curve, and eventually the production side of the curve, which, as we all know, is going to be imperative for us to satisfy our needs around the supply side, which I believe is going to position us very, very well at any point of the cycle.
Well, we're sensing your energy. Thank you for the update. We really appreciate it.
My pleasure, Mark. It was really good to talk to you.
Yeah, you too, and we'll see you soon. Sam Lee, President and CEO at Northisle Copper and Gold.